Oh, Ken is here as well. Hello, guys. I hope you can hear us. You can see us. Ken should
Hey
be
guys.
any moment. Hello, Ken. How are you doing?
Yeah, good man.
Ken is here
You're in.
already. Hi, Ken.
Hey, Angel.
Yeah, perfect. Thank you for
You
confirmation, Titania.
okay?
Hi, everyone.
Okay, and let me also.
I think I cannot hear Ken.
You're in different settings today.
I can.
Yeah. I'm in a Preg's office, so I've got different camera. Hopefully, you can't see just circles.
I think you're a little bit quieter than usual for me.
Am I?
Yeah, slightly.
Let me try to set up the mic a little
Yeah,
bit.
I've got my speaker volume quite high as well.
Your voice is too low, Jake. Okay, I'll work on it. Give me just a second, guys.
No worries.
Is it still too low? I think so.
Yeah.
Damn. Just a few moments, and I'll. Let me try to set it up here. Okay, and
Someone was asking about your NQ sell, Angel.
You say what?
Someone was asking about your NQ sell.
Oh my God, it's been dropping since yesterday. Yeah, like no break at all. It's crazy.
I don't know why is it so low. Don't want to scream into microphone, but I guess I would have to.
Yeah. Jake, you know, in the settings on Riverside, is it turned up to the max?
I have it on a max. Jake,
yeah.
AUD, GBP trade best. Did you actually take those guys? The Australian dollar, Japanese yen. I said it on the last live stream, and it happened. It happened. Yeah. So
you did, Jake.
I closed it a little bit earlier, but still made few profits on it. So congratulations to anyone who took that trade as well. Scream, Jake, let it out. God damn, what's wrong?
I mean, I think I can hear you like slightly like less than the normal, but
okay, I'll try to set it differently. Let me see what I can do. Everything's full. Okay. And let me try the last thing that I can do without distorting it. Okay. I'm kind of scared that there's nothing I can do about it, guys, at this moment.
Did you try with the AirPods mic?
Maybe I can try to switch, but
I think you cannot switch.
Okay, if you can you dive into this week's analysis, and I'll try to play with the mic a little bit so they can hear me then. Just before you start, I'm going to remind that throughout the live stream, I'm gonna do the quiz giveaway. So I'll be placing the questions at the bottom of the screen. So guys, if you see a question, just answer it, and at the very end of the live stream, I'll just choose few winners of the 50k E8 signature evaluation.
All right.
Let's go.
Okay, perfect. It's your turn, and I'm going to play with the mic.
Awesome. Just going to share the screen now. Screen. Okay. To be fair, I've had quite a busy last couple of days. Trading, I mean, opportunities, to be fair. So I'll walk through. Let's start off. We'll leave dollar for the moment. We'll leave dollar because we'll come back to the dollar. Let's talk about we'll just quickly go over NZD. Okay, so you guys would have seen, obviously, you've got a nice drop at the moment, NZD. And to be honest, Jake called this. I was on the fence. I didn't think they were going to be. I knew obviously their general tone should be dovish, but I didn't think it's going to be as dovish as obviously Jake called. Okay, so RBNZ, as you guys would have seen, they were dovish. Okay, so they cut rates by 25 basis points. That was expected. Now, why they were so dovish is a few reasons. Remember, it's always important, guys. You know, when it comes to central bank decisions, it's not just about what they do in terms of there and then. Like, for example, this was priced in that they're going to cut. It's always about the communication. You know, we've spoken about this before. And in their actual statement, I should have been a bit more prepared and brought up all the comments, guys, but I remember them off the top of the head. Basically, the RBNZ, they lowered their growth forecast to 1.6% from like 2.5% for this year. So a substantial cutting of their growth forecast. They also they see lower inflation, and they're expecting, basically, they've left the door open to more cuts. Markets are pricing in next cut in October time. And their outlook, China potential slowdown, their outlook was very downbeat, okay, on the economy. So that's why NZD got smashed. Now, when we look at NZD USD, let me make one thing very clear. You know, I like when things start to form in terms of divergences. Remember right now, at this moment in time, the FOMC has not cut rates yet. They haven't resumed their rate cutting cycle. You know, they've had a cut here and there. But the RBNZ have been cutting rates drastically, right? We see their base rate is at 3%. You know, they've come all the way down from 5.5%. Okay. And obviously that is a divergence in comparison to these guys, right? The FOMC right now, when you look at the Fed funds rate, forget about what's been priced in a moment. Rates have been on hold. Okay. Now, even if they go and do that cut, okay, even if they go and do that cut that's priced in right now for September of, what's the probability now? It's 84.8%. Even if they do, there's still a divergence because the FOMC will most likely, if they are going to bow down to pressure from Trump, it will just be a one and done situation for a little while. But the RBNZ has cut rates and they're going to be cutting again, similar to what the RBA communicated to the markets. They cut rates and they're going to be cutting again. All right. Whereas the FOMC are probably going to be slower. All right. So we have this divergence forming. And remember, NZD, New Zealand, are exposed to China, and China is still having this slowdown. Remember, we spoke about it before where I was talking about Chinese prices are dropping. Right. So that has a knock-on impact on New Zealand. Okay. Because China's their biggest two-way trading partner. Anyway, structure here, lower high, lower low, lower high, lower low, lower high. And obviously now we're producing this lower low. Okay. We've taken out stops triggered to the downside there at 59.00. So don't just jump in and be like, I'm missing out on this sell-in. Wait, guys. Okay, let's wait for this little pullback, right, for a new lower high, and then enjoy that swing. I think when you look at this, obviously there's room to fall back into this range here, this pocket down here around 56.50. You guys can see it from here down to there. Okay, from here down to there. That's where we're likely to head. All right, so that's New Zealand. Now that helped, obviously. You guys know, obviously, I was long GPNZD, but obviously that well and truly dwarfed my targets. And obviously GPNZD flying. Okay, we've come up to a very critical area. And you can see, obviously, this top here with April. These are the highs of 2025 that we're approaching. But remember, I noted that we have room to go and print a higher high, because when you look at the monthly structure to the upside right now, high, 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 low. Okay, I will just be cautious. Right, but this is probably going to squeeze a little bit more higher before we come to the downside. Okay. The reason I say be cautious, now I'm jumping over to GBP, is because today we had UK CPI, right? Inflation. Look at that, 3.8%. That's really bad. Okay. In short-term reaction, you would have seen GBP strengthened. Okay. GBP did rally, but when you look at think about this, this is a bad situation for the UK because they have stagflation. Growth is still low and prices are just getting out of control, right? And the Bank of England just gone and cut freaking rates. They've gone and cut rates. And remember, when we're cutting rates, when inflation's high, there's a risk that inflation goes even more higher, right? So this is not a good place to be. So yes, GP strengthened because markets thinking, oh, maybe the Bank of England holds off with further rate cuts. But then it's not a good economic standpoint to be in when you've got prices going out of control. So ultimately, that is a GBP negative. Okay, but GPNZD obviously pushing to the upside on a little bit of a divergence there. I want to go over to a trade that I took yesterday and today that I've got running. So I'll firstly go over the trade that I took yesterday. Now, we also had, let me just go back. Yesterday, we had Canadian CPI. Okay, so Canadian CPI is still generally sticky. There are some readings that are showing it's topping out, potentially slowing down a little bit, but it's still somewhat sticky. But we will get to that place where the Bank of Canada are going to cut rates again. There's pricing of expectations that these guys are going to be cutting because we saw a slight cooling in inflation in some of the numbers, slight cooling. So GP CAD, I did have some longs. Okay, and the reason I like these longs was, can you see, obviously, albeit we've been a little bit choppy, but ultimately we are structured to the upside, generally speaking. On the daily, you can see we're in this firm incline to the upside. 4 hour, this is what I was watching. You guys know, obviously the 4 hour is my engine where I'm looking for potential swings. Obviously higher highs, higher lows. And then I was watching this, still holding structure, albeit we ran into heavy supply here. I was eyeing up longs here initially to see those reversal candlesticks that I'd like to see. And then I saw the price obviously bottoming out here. And obviously this was the new higher low for me, right? So I was going to be swinging that for a higher high. Saw this bullish candlestick here. It was just after the London Open. It was around London Open at 7 a.m. London time. Oh, what is going on here? Sorry, one
that's a beautiful long there.
Yeah. So it was on the break of the Asian range. Okay. Obviously got my higher low here. And then I was being conservative. You know, as I said, guys, before, when I'm trading on an intraday basis, even with swing trades, I am sort of quite conservative in the sense of I'm just looking at those extreme previous high areas. And obviously the prior session, it was up here at this 87.30 area. So I had targets there. And then obviously those were hit with thanks to this morning with that highest UK CPI. So you see that pop, boom, and then ran into supply at those highs. Now, you would see there's a position open here. So I took some shorts because of what I just said. Remember what I just said about that CPI situation is not great for the UK? It's not, because it's higher prices. It's crippling on the consumer. So why I took these shorts, there's a couple of reasons. Firstly, okay, and this is more of a swing because I know this is not going to be instant. On a monthly, right, with GP CAD, we're at monthly resistance here. Okay. Sorry, give me one moment. My mouse is lagging out a little bit. I think it's about to die. So we're at monthly resistance. Can you see that here? At around sort of 87 territory. Bam, 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 bam. Okay. So monthly resistance. Obviously, I know you guys, not to undermine any of your knowledge, but I'm sure you're aware. But when we come up to big monthly areas, like, it's not even monthly, big areas on the daily, on the weekly, on the monthly, typically speaking, regardless of how much momentum we've got, there is going to be a lot of either support or resistance at those higher levels, okay? A lot more. So they tend to be respected initially before we break through them. So I was looking at this for potential rejections. Obviously, as you saw there on the monthly, just slowly going over to the weekly because my freaking mouse, sorry guys. What's happening here? It's going really slow. There we go. Okay, weekly. You can see as well, this is like a weekly top. So I was monitoring that. Bam, bam. Okay, 87 sort of 50. Then on the daily, you can just sort of see those rejections that we've had already. Okay, and it's the 4 hour where I saw this is like a potential double top. Bam, bam. And then, yeah, it was this hourly that made me enter. So reversal candlestick up here, bit of a long leg doji, dragonfly, whatever you want to call it. I would have entered here, but I missed that. And then I saw this follow-up bearish candlestick just below. So I entered there. Okay. So I have these shorts running. And if you look at targets, basically from here, really, this is me being conservative. Every time we've had rejections here, we've at least come down to this next major area, right? Around this mid 84 region. So that's where I'm targeting right now. Okay. Let's see. All right. I think it's a little bit ambitious because the fundamentals are not the best in Canada, and they're not the best in the UK. So it's sort of just battle it out, see what we can get. So that's what I've got running at the moment, GBP CAD. Okay. I also have GBP yen shorts running. So let me pull those up. Now, with this, right, same fundamentals as I just noted there with the UK. That is not good. You'd actually see underperformance today with GBP. Look at it across the board. And I think people are thinking how I'm thinking as well. Okay. With regards to those, the inflation situation. Now, the reason I entered this, again, it's my sort of look, I was optimistic that potentially we could break through this psychological 200 barrier, but we couldn't. There's a lot of resistance there, right? Saw this topping out. Daily momentum clearly in daily momentum of this push to the upside ran out of steam, started topping out here, rejections at 200, 199. And obviously you can start to see some structure start to take shape, lower highs, lower lows. It was actually on the Asian range that I'd entered. Okay, we had the liquidity sweep there. All right, this usually, so you know when we get this nice bearish engulfing or rejection or reversal candlestick, I would have potentially entered if that was really engulfing, but it wasn't quite. So I waited patient. Then I saw this, I was like, oh, that's not going to push. That's not going to push, carry on pushing lower. But then I waited a little bit longer, and then I saw this, and I was like, okay, yeah, momentum is to the downside now. We're going to see a continuation. So I entered there, okay, this morning, 10 a.m. London, and I've got a swing, okay? I've got a swing in motion. I did clip partials here. Obviously, as I always say, when I'm trading the Asian range, typically I'm looking for the Asian range low, okay? But I do have a swing trade in motion. That's how I get my swing trades as well, keep in mind. Ideally, through the Asian range, okay, is one of the methods that I'm looking at. So I have a swing in motion for GP yen, and similar to GP CAD, I'm just looking at the next major daily area, which is down at 196. Okay, so we're looking for this, come down, retreat here. All right, so that's what we've got. Every time we've come here, I know at least come here. Okay, so that's what I'm looking for. You guys can see that. All right. So that's GBP. GP underperformance, higher CPI is not a good thing because it's out of control. So that's that. GP Aussie, obviously we had those longs previously, and yeah, the remaining position was clipped there, which was good, but I left only a tiny portion there. So that was done, which is good. Again, that was initially on that GBP CPI, but then obviously now markets are like, that's not a good thing. So it's selling off. Okay. Dollar, guys. I mean, look at it. There's nothing need to know. Okay. Just wait, and we will get that breakout come that Friday. Okay. As I've said to you guys, Jackson Hole, right? Things are very hot at the moment with Trump and the FOMC. He's even calling for someone else, Lisa Cook, to resign due to something. I need to look into it, but he's pulling something out of his bum. He's just attacking them, basically. And that initially on this news, we saw a little bit of dollar weakness on the news. We had a bit of a drop earlier today on that. I think it was about here, somewhere here. But the reason being is just the credibility issue, okay, with when we've got the president attacking the central bank. But ultimately, this is just all noise at the moment. We're waiting for Powell. Okay, so we're not going to get any dollar breakout until Powell. There's possibility that maybe on Wednesday with the meeting minutes, but I highly doubt that. Excuse me, tonight with the meeting minutes, but I highly doubt that. Okay, because markets are just focused on the on what's the current situation. Remember, that's past looking. Powell's speech is going to be on the current situation, taking everything into account up to date. So this is very, very important. All right, we're going to see some big moves, actually, I believe, on Friday at 3 p.m. London time. Be ready. Okay, they're going to be big. Because I think that's bigger than September rate decision, right? Because then that'll set expectations all the way heading into that rate decision on the 17th of September. Okay. I feel like I've been talking a lot, so I don't know if Jake, you want to?
Yeah, it's okay. Yeah, I'll just use my left hand as a microphone holder. I'm watching the chart as you speak. Currently about to go either for the swings on maybe on Australian dollar or New Zealand dollar. The only pair that I was trading was the Australian and Japanese yen. Even though I was so sure about the New Zealand dollar, I didn't trade it again. But yeah, it happened what I thought is going to happen. New Zealand, and I agree with you, is going to be now weak in upcoming days, weeks, probably. So mostly continuing in the downtrend because Australian dollar, both New Zealand dollar, they are in a downtrend on the indexes. So I'll still be looking for short opportunities. Someone in the chat also said that there's a possibility for the Euro Australian dollar, which we discussed when we were probably about 100 pips lower on the last live stream, around 1.8 level. So yeah, we broke 1.81. I think right now with the current structure on 4-hour time frame, I can even share the chart. Yeah, let me do that for a while. Hopefully I can manage it. Screen sharing. Even, guys, can you hear me better when I'm holding the mic?
Mm-hmm.
Yep.
Okay, yeah, so I'll be holding that. No problem. Let me know once you see my chart.
Yep.
Perfect.
They're
Okay.
on.
Let me just extend this. In a little bit of war conditions today. I'll be back on Monday, so it's gonna be back into normal. But I think that we're gonna have some sort of a correction on Australian dollar, Euro Australian dollar. So I'm expecting getting back somewhere to 1.805, 808, and then there will be a possibility for re-entries. And I still believe that we're gonna go higher. Once the correction is done, I think 1.82 is another level where we can head. So that's Australian dollar, Euro Australian dollar. Then the very favorite, and I've seen 3 guys or maybe 2 guys in the chat who went for that trade because on Monday I said if we're going to close before these 2 lows, I'm going to get into short position, and we felt with the momentum on Australian dollar, Japanese yen. Now we hit the zone. I'm going to zoom out a little bit. I hope you can see that, but it's kind of strong support. So I'm expecting, again, as with the Euro Australian dollar, some sort of a correction on Australian dollar. So some sort of a pullback. But overall, guys, I'm still bearish on Australian dollar, Japanese yen. And then, of course, you can take few New Zealand pairs. Still, on the indexes, we're bullish on Euro. So even Euro New Zealand dollar doesn't sound bad. You suggested the pound and New Zealand dollar. Was that the one that you were speaking about, Ken?
Yeah, I'm out of that now. I was
Oh, you're
long,
out. Okay,
but I
okay,
think that's
okay.
gonna. I think that's in potentially a lot of these GP pairs are pulling back now. I think they're in
Yeah.
trouble. Yeah.
And then you were speaking about the US dollar, Canadian dollar, right?
No,
Where,
no, I
oh,
haven't touched that.
Oh, I thought. And what was the position where you took the long and then the short?
Oh, GP CAD. GP
Oh,
CAD.
that's a GBP CAD.
Yeah,
Okay,
yeah.
because I was watching the US dollar and Canadian dollar as we
Yeah.
hit 1.388, and possibly we can get some sort of a correction if the US dollar, is gonna get weaker because I can't really predict the dollar at this moment. It's just moving somehow. Yeah, don't know actually. So I don't know what's your view on dollar, but I would be probably keeping my hands out of the dollar at least for upcoming days. So for me, best choice is to go with Euro Australian dollar, Japanese yen once we have these corrections, or just get into the New Zealand dollar trades. Let me just double check if we have anything. Swiss franc is getting back into a trend. We had slow correction, and now we again bullish. So I think also pairs like Australian dollar, Swiss franc could be good for shorts. New Zealand dollar with Swiss franc, also good short opportunities. So yeah, I think that would be probably the pairs that I'd be watching in upcoming days. Longs on Swiss franc, longs on the euro, and shorts on the Australian dollar and New Zealand dollar. Possibly again some longs on the Japanese yen once we have some sort of a correction on AUD Japanese yen. Yeah. So that's as for the pairs that I'll be watching this week. Let me double check the chat if there's some currency pairs. What about UJ? Do you watch now the Japanese yen with the US dollar?
Oh no, not UJ at the moment. It's too rangy for me at right now.
Is it
super rangy? Yeah.
Oh yeah, it is.
Yeah.
I can see that. Well,
Yeah.
potentially, range trading, maybe if we bounce from that 147 level,
Yeah.
heading back to 148. If
Yeah,
we'll be
exactly.
ranging between that, it could be also a good trade opportunities if we
True.
get that
True.
the bullish candle after this one. If we get that again, like shadows, just like these, and then we have a bullish candle after that, the odds or the probabilities of the price continuing in that direction is pretty high. So yeah, sometimes candle formations are enough on lower time frames. So yeah,
Yeah.
because my belief is that lower you go on the time frame, the better is to use technical analysis and price action and the patterns, candlestick patterns. So that's as for the UJ, but I wouldn't take any swing trades. GBP Swiss franc. Well, I think that's a short. I don't think that I have a specific analysis on GBP Swiss franc. This is the pair that I haven't been trading. Oh, this is probably from the
Oh yeah.
camera view trade.
That's definitely topped out. It's topped out.
Didn't want to do that. Where's the again? Sorry. Okay, perfect. Get rid of this and get rid of this. Okay, yeah, that's probably bearish market. Looks like it. Yeah, no analysis here, but with the Swiss franc recent strength, I think we're heading back towards 1.07, the lows from very start of the August. So yeah, I would be if I'd be trading GBP Swiss franc, I'd be sure definitely. Someone is asking, you can Japanese yen becomes strong last 2 days, but USD strength is that it only break 80 pips. Okay, I don't know if there's the question in it or just
So
yeah.
so what was the question? JPY's become stronger.
Yeah, probably. I'll read it
Yeah.
in the chat.
So, okay, I'll give you the reasoning behind that. It was down to macros. Okay, and this is where there's a lot of manipulation sometimes with what people say. So, the U.S. Treasury Secretary Scott Bessent, okay, who's obviously Trump's one of Trump's minions. He basically said that. So, U.S. Treasury Secretary said that Bank of Japan is behind the curve in addressing inflation, and that further interest rate rises were required. So he said that basically, Bank of Japan should start raising rates. So so markets. So basically, it's almost like verbal intervention. Okay, verbal manipulation, to be quite frank. He basically just said that they need to play catch up and start raising rates, and markets are now thinking that that will obviously narrow the divergence at the end of the day with the Bank of Japan and FMC. So for him saying that they need to hurry up, they're behind the curve, they should start raising rates quicker and narrow that divergence, that interest rate differential that we have, where rates are so low in Japan and rates are high in the United States. And it was literally from that comment. It was from last Thursday, 14th of August. And I think when you look at UJ or just yen in general, from then it sort of started to gather some momentum, really, from 14th. Yeah, look at GJ from the 14th. Look at Aussie yen from 14th. Look at all yen pairs actually from the 14th.
Yeah.
Those comments are what drove it. And people and crazy mother beeps tell me that macros don't freaking lead the markets. Well, they freaking do. So that's just from that's one comment. So that's your reason.
Just looking at the AJ, and I think it would be safe to trade. I would love to trade it if we go back towards the 95.3 this zone. If we hit that, which I don't believe is going to happen, but if so, it should be also the golden zone of this move between the 50-61% Fibonacci retracement. I think this would be a great opportunity to sell. However, I don't think it's going to happen. I think that this is going to be just some sort of a range trading on AJ, and then we go down immediately. We'll see what happens. Again, I'll be looking for something like this. Again, the big shadows, which are kind of favorite in last months. candlestick patterns prove me to be right a lot of times, especially recently. So diving more into them. Okay. Ken, do you have any other forex pairs that we like to discuss, or do we put Angel on the camera and with the index analysis?
Yeah, let Angel take the mic.
Okay, Angel, I'm going to stop sharing the screen. I'm going to come up with more questions, and you can share your analysis.
Yes, sir.
Perfect.
All right. So the reality of trading is like I was actually waiting for the drop on NQ yesterday, and I wasn't actually able to catch any of this wild moves to the downside. I was actually to take a short here today. It was actually a quick one, as you guys can see. Why quick? Because this was actually not the time that I like to trade, and we were already met on the target for today. But it was actually a nice short. And yesterday, since I'm only trading the macros, I wasn't actually able to catch the sells either. I took a long because that was the setup that I had during the macro. So I actually took a long that got stopped out at break even, right? And then just a few minutes later, we had that massive drop to the downside following the narrative. So it is what it is. We have to stick to the plan. We have to trade what we see, you know. So starting with the hindsight, let me go to the weekly time frame here real quick. All right. So weekly time frame on Nasdaq. I can see finally a retracement back into the weekly gap. Right? I've been waiting for it for a long time. It's taking time. I thought we were actually reaching on this candle here. It didn't happen. So now we're kind of, on this range here, trying to reach that gap. So we might get there before continuing higher from there. Right? This is what I would like to see on the weekly time frame right now. So as for tomorrow, I'm still looking for sells, of course. As you guys can see, as soon as we swept this high here from the left, I was actually looking to this gap here because I wanted to see what's going to happen. If the price reacts from the gap, we'll see more buys here. Since this was all-time highs, but actually it was in burst. So we closed below the gap, and we're starting to see bearish candles here. So what I would like to see for tomorrow, based on this price action on the daily time frame, we already met this objective here, which was the one for Monday. This one here was it for today, and this is the last one that I can see for the week until we get to the weekly gap, right? So it will be nice to see tomorrow a slight close above here, like on this daily candle, and then we're going to leave a new gap here, right? If we close like around here. So what can happen? Tomorrow, we are going to sweep the previous daily high inside this gap. So it will be really nice to see, price tapping into this gap and then continuing lower from here. It seems really, really interesting. I would like to see how this is going to develop, like as for today, to see how it's going to close for today, because we already had like a 400 points drop. Nothing much to do. It was nice because we reacted and we gave like this nice sales from the gap that we were looking at on Monday. So yeah, that's pretty much for Nasdaq. I would like to see then a retracement back into this range here in this gap, and then see a reaction, because we're going to sweep previous daily high. And of course, if we have the Ken model, if we have Asian range high taken inside this area here, it will be really, really nice. It will be really, really a good confirmation to look for sells. Of course, there's nothing 100% right, so whatever can happen. But it's going to be really, really interesting tomorrow if we sweep the previous daily high within the Asian range. So yeah, so it's for Nasdaq. So I will want to see the price trading higher, then sweeping here these highs, and then going back lower to take this sell side liquidity here, resting here to tap into the weekly range. Right, it's pretty much the same for SP 500. We still have this range here in the weekly time frame. Really similar. We're still trading here. This is a 4-hour time frame. We have this gap here, right? This is the one that is getting inversed. So same thing as Nasdaq. This is the gap that is going to be for tomorrow once the day closes. So tomorrow we want to see price trading higher, sweeping the previous daily high, tap into this gap, and then going back lower. My target on SP 500 for tomorrow, if we do that, is going to be the previous daily low. I'm not going to hold until this happens. Of course, we have some nice lows here to be taken, but my target will be the previous daily low, which will be today's low, right? One that we just made a few hours back. This is we also have a nice displacement here from this low on the 4-hour. And when we displaced that low, we left this gap here. So this is actually matching with the daily gap. It's actually matching. Let me just use the Fibonacci here. It's matching with the equilibrium of the leg here. This leg. So it looks really, really nice for tomorrow. We also have news tomorrow, if I'm not mistaken. Finally, no news Monday, Tuesday, and Wednesday. And of course, when we have data being released, we can see wild move. I mean, we already saw like mad move yesterday and today, but yeah, it's going to be really, really interesting as for tomorrow to see how the price develops on this range here for SP 500, right? So pretty much I'm going to leave this setup here. This is going to be the low that I'm going to be looking for the price to take as the target. So I will want to see the price is trading higher, tapping into the gap, and then going back lower again. And that's for the SP 500. YM, the Dow is really, really choppy. I mean, you can get caught like every single day that I tried on the YM lately, it's been caught at break even or just a stop. Of course, we still have this leg here. It's the same as the last week. We are waiting for a little bit of discount to actually get involved in the longs, but we're actually giving some sort of divergence on the lows here because SP 500 and Nasdaq are already on a discounted price to look for longs. So this is not happening here. So I won't be surprised if the price actually didn't retrace and this just go back higher. It can happen because when you see the price consolidating like this, you'll see more often that after this happens, you'll see just expansion, whether to the downside or to the upside. It's really weird when you see like a consolidation and then the price retrace and then naturally just starts like the trend. It's very weird. So right now I'm here. I took a trade today on YM as well. It was right after we swept London in Asian high. So you guys can see here, we swept the highs, price came back down, displaced the lows. We had a retracement where to the 70%, which is the optimal trade entry. This is where I took the trade here, protecting this high. Price gave an initial reaction, and now we're trading back down. So I guess I'm going to get stopped out at break even. Or I'm just going to close the trades because I cannot hold trades overnight on futures. But yeah, so I'll be pretty much looking the same for sells. It's just, I would just rather stay away from the Dow Jones right now, watching at this price action. We're getting pretty much on that risk off momentum if actually the DXY starts to push higher and then we see the indices trading lower. So it's going to be really, really interesting. Let's see what tomorrow's data brings. So yeah, that's pretty much it. Let me check. Let me take a real look at quick look at the chart.
Let me see if there were any questions regarding the indexes. Market, okay. Yeah,
Yeah,
I think you're good
this
to
is
go.
for
Yeah, sorry.
Levi. I think it's for Levi. We will consolidate now at least today, selling 600 points. Yeah. So usually when you see those mad movements, you see the price consolidating. So it's going to be interesting tomorrow because, like on this area here, so it will be nice to see some sort of consolidation that matches with the Asian range. So it's going to be really interesting. Let's see. Tomorrow we consolidate a lot during the overnight session, Asian, London, and then tomorrow after the data, if we swept London and Asia and then we tap here, I'm going to be looking for sales. If London sweeps Asia in the same direction and then we have the news and we have confirmation here that now the structure is bearish, right? I'm going to be looking for shorts again on the New York session, on macros, of course. But if tomorrow we are ranging, right, and then London takes Asia, and then we start trading higher, is when it's going to be interesting. So you've got to be really careful to the way you're going to trade what is going on right now. But yeah, so we never know. Let's wait for tomorrow. It looks really, really nice. It looks clean. I'll just right away from when you see like the structure and the setups really, really solid, clean. It's better to trade. So yeah, that's pretty much it for today,
Perfect.
guys.
Thank you so much for your insights, for your analysis. Appreciate it, as I don't trade indexes at all. So always comes handy to have a guy specifically for indexes. Okay, before I do a sum up of the questions, is there something that you would like to get into regarding the markets, or you shared everything that you wanted to share with traders as for today? Just in case.
Well, just as we speak,
Yeah.
I'm just looking at a potential swing at the moment for CAD Swiss. Let me. You got the screen, Jake?
Taking the short. I think the no. Do you want to share the screen?
Yeah.
Yeah, sure. Go ahead, please.
Give me a moment.
Just before Ken shares the screen, the answers, the correct ones for the questions for the quiz. The first one was GDP, so gross domestic product, that measures how good economy is doing. So higher GDP is positive for the economy, lower GDP is negative for the economy. The second question, name 3 most important economic indicators. Economic indicator is also interest rate. So interest rate, then you've got the CPI, and then you could say unemployment rate, labor market, you could say GDP. I would probably take both. And then what's the measure? And I was surprised that most of you know that. It's the COC report that measures the big players, or the not measures, but shares the positions of the big players in the market. So I don't have any more questions to that, but I'll check your answers, guys. And then again, at the very end, once this video is recorded on Edelmarket's YouTube channel, I'll include in the comments the winners of today's quiz questions. I see that Can is already done. So yeah, you're looking for shorts. Yeah, I thought so.
Yeah.
So
I mean, yeah. The thing is with CAD Swiss, obviously, the fundamentals as we've gone over in CAD aren't the best. And as we know, CHF, just the flows just always seem to happen into the Swiss franc. There's still, I guess, quite a reasonable amount of uncertainty in the markets at the moment. So I like the idea of this. The thing is, we've been ranging for a while, but now when CAD Swiss breaks, it really breaks. It has those long periods of sort of consolidation and pullback, as you can see from the messy chart, the breakouts. And now, see, we're getting a bit of a breakout now. I was viewing this a while ago when we were talking about it on the stream. but we're just stuck within this range. But now we're getting a breakout. Okay, we're getting a breakout of this range, which I'm really interested in. I'm just eyeing this up at the moment. Obviously, daily, you can see this firm sort of candle. We're trying to break these lows here. There's a lot of obviously support, excuse me, as you can see, if you just mark up basic horizontal line there, but trying to protect 57s. I think this is grinding down now. We're just trying to take some shape with some structure, in the past. So yeah, look, you can see obviously the lower highs, lower lows. We're breaking out a bit of consolidation here and extending to the downside. So I'm watching this. I will wait. I'm not going to execute it right now. I mean, I could execute it right now, and I'd feel quite comfortable placing stops above the range, right, of sort of 59.10, and I'll be targeting again. This is like no man's land, because when you look in history, as far back in this trading view data, we haven't been down at these levels. Okay, so it's sort of no man's land, and people always ask me, because there's been a number of times when, like with gold, I've called targets to the upside that just haven't been seen. And how I usually do that is it's not a magic trick or anything. It's just something that's worked for me from past experiences. And, when we have these periods of consolidation, right, we form what's known as flags or channels, whatever you want to look at it. And I usually measure the momentum, the initial move that we had. So say, for example, this one here, we've got this most recent flag here where we had this drop of about 300 pips. I usually measure that momentum move, and then I'll be expecting, that's where I'm expecting the targets to be, and same sort of thing with up here. We had this flag here, and I usually just measure that flagpole, for my targets, essentially, just when we're going into no man's land, levels that we haven't been. So that's what I'm looking at here right now with this latest sort of formation. We've had this big drop, then we went through some consolidation, and then just measuring this pole. But I'm looking at potentially 56, and then also this sort of 54, 50 area. Again, this is like one of these cases of licking my finger and putting it in the air somewhat, but I like the way this is forming right now. So I'm going to look to wait. I'm not going to jump in right now because we're already at the lows. So I would like to see this obviously being broken down here at 58, maybe just getting a little bit of a pullback and just seeing rejections there. So I know that this is enforced now. This support is no longer there. It's been broken. And then look at those shorts and go for a little swing position, because it'll take a little bit of time. But when this does break out, it does move pretty fast, as you've seen in the past there. So yeah, that's on the watch list right now. If we can grind down this 58 area, 5800, then I'll look at those shorts. So yeah, it's on the watch list right now.
Yeah. I'm probably on it with you, because just fundamentally speaking, the Canadian dollar for the past few months, very weak. And the Swiss franc, most of the people in the chat, they know that I'm a big fan of a Swiss franc, so would never sell that currency and buying it very often. So as a swing trade, definitely agree with you. I don't think that there is any high probability that we can go towards the upside for longer. No chance, at least at this point. Canadian dollar needs to get strong, because Swiss franc usually don't get weak, so it would have to come from Canadian dollar, but I don't think that's going to happen. So yeah.
No, definitely not. I think where's oil prices at the moment? Just out of interest. Okay, oil's still on a decline, which doesn't help CAD's case. For the last sort of few weeks, we've topped out with oil, and for those that don't know, there's a lot of supply right now in oil. Everyone's ramping up supply, their production. OPEC plus, they're at record highs in terms of how much they're producing barrels per day. And as Trump says, what was one of his things he said? Drill, baby, drill. Let me just see. It's one of things Trump said most recently as well. It's drill, baby, drill. He wants to keep producing oil. So, I think with all that supply in the market, and potentially if we have an economic slowdown, the demand's not going to be there. Okay, so then there's going to be all this supply, not enough demand, so prices are going to come down. So that doesn't help CAD, because obviously CAD is Canada is a large oil exporter. A lot of its revenue comes in oil sales. So I think CAD looks quite good. CAD Swiss shorts look good.
At the same time, I mean, whenever there is a high chance of possible peace between Russia and Ukraine. I think that's going to influence the oil prices as well toward the downside. So yeah, there's, I think more risks are toward the upside, the downside. So probably selling the oil is the way to go, at least now, especially once when the Can said that the Trump is going to produce more. Yeah, agree
man.
with you. Okay,
Awesome.
perfect. Thank you guys for sharing your analysis. Also, thank you guys for being here, for participating in our live streams. And I think I don't have any other markets that I would like to add. Let me just double check if I've missed something. Probably not. So yeah, thank you guys for being here. The winners of, I'll go through all the answers, those of you who answered correctly and as fast as possible, and I'll leave the winners in the comment section. And I'll see you next morning. Sorry, next morning, next Monday. Next Monday.
Yeah, nice one, guys.
Yeah. Okay. So thanks, Ken. Thanks, Angel. And I'll see you on Monday. Thank you guys.
All right,
Appreciate
take
you.
care, guys.
See you guys
next week.
See you next
All right.
week.
See you.
Take care.